Hello everyone, my name is Marcello Kolax and I am the Managing Director at Clever Markets. Today we are going to have a look at European energy markets for the week starting 11th of March 2024. And that was quite a week. So we'll start with the TTF, which has made some really interesting moves. So we'll start as always with the weekly chart to just get an idea of the broader picture. So we can see overall long term we are still bearish, of course. Yeah, you can see like the big broad swings, and also within that the medium term is bearish. Bearishness is also confirmed by the lower flows of the 8 and 12 exponential moving average, and also we are still below zero and we got a bearish signal on the MACD. The only thing that's a little bit worrying in quotation marks for the bears is this bullish signal on the stochastic. So that was confirmed. That was confirming the bullish engulfing candle from 2 weeks ago. And last week we said that we needed a move or a close above this constellation, so the bullish engulfing, in order to kick off a little bit more of an up leg. And we did close higher indeed. And the first hurdle to take now is the 23.6% FIB retracement, which is a retracement of this down leg, and now we're looking at 30.29, and anything below this level here is still considered noise, even in the midterm outlook, and the idea is still for the market to push lower. So if we get like a bearish candle pattern here, and it would be confirmed by some bearish stochastic moving up and then moving down again, then there's the likelihood of the market to simply continue lower. For now, I don't see it. There is room for a move towards 30.29 because there's no indication for the stochastic to move lower at all. And volume is also fairly solid on these up legs. The only thing that's a little bit worrying is that we did have long wicks, especially the upper wick, and that shows that the bulls could not maintain their gains throughout the week. So if we break higher, then we would orientate ourselves with the next couple of FIB levels. Okay, so what does that mean for the daily chart? So on the daily chart, this up leg is this here, essentially, yeah. And we see that we are still well within the descending channel. And we have drawn in some FIB retracements because we did get a bearish engulfing here. We put on the FIBs trying to identify how low we can go. And now we are already at 50%. So 50% means we have retraced this up leg by 50%. So this is half. Usually the deeper corrections can go all the way to the 61.8% FIB. And yeah, I see that happening because there is still room for the stochastic to move lower without moving into oversold territory. What happens at this level? Well, the market kind of has to make a judgment call. I feel that at this support, maybe even at 50%, but in this support area, 50%, 61.8%, we are going to bounce. I think that because we see that the MACD is moving higher, so you can see while the price was still moving lower, we did see that the MACD was moving higher. So this is called bullish divergence. So that means the market has the strength to move up eventually. We also see that the 8 and 12 exponential moving averages are also pointing higher. So first, a little bit lower, and then we could potentially attack this high again or the channel. I want to make you aware of something that one of my LinkedIn connection pointed out. So they were wondering why my channel looks so different from theirs. So I did make a separate video on that. So you go to Clever Markets, the YouTube page, just type in Clever Markets and you'll find the latest video, or go have a look at our LinkedIn page for Marcello Kolax. I put it there as well. So there's a difference between maybe my chart and your chart, because sometimes I work with the semi-log chart. I can see how things are changing around. Boom, now we are within the channel. And if we work with the arithmetic chart, which is the standard setting, probably what you're working with, we get quite a little bit of a different chart. So here we see then 1, 2, 3 hits. Yeah, here we broke. And then this here wouldn't be a channel with an arithmetic chart. It would be more of a falling wedge that was resolved. So these are usually resolved to the upside. There you go. So even if you would be working with this or that, it doesn't really matter. Both are perfectly fine and acceptable. Details are in the video. The important thing is that we haven't broken above this most recent peak yet, and that we're not making higher highs and higher lows yet. But here's another thing, yeah. So looking at the arithmetic chart where we are on now, we see that another bullish indication is actually the falling wedge resolving higher, because this in itself is a bullish signal. Okay, so that is it for the TTF daily chart. Let's have a look intraday. This is a little bit of a mess. So we have last week identified this double top with a neckline here. And we did initially move below that, and we said, okay, what we want to see is a break below the trend line. And then we are really bullish. And then you can see the 24.8 aligns with this really important trough here. And on the daily chart, that would be the 61.8% FIB. That's kind of like a good support level. Like the market is probably drawn to this. So, but what happened? First of all, the neckline wasn't validated with a push higher. So there was no head and shoulders downside target anymore, which was also like kind of in this area, I remember. So like 3 targets in that area, wasn't there anymore. And then we pushed past the trend line quite a few times. We just swung by it. So we had a previously a fairly bearish outlook on the market, but now I'm not so sure anymore, to be honest. So I feel we really want to see this 25.62, 26.97 like sideways range almost. We want to see this resolved before we make a decision. So the only thing that's certain is that we'll possibly continue sideways a little bit, and then there's a chance for the market to maybe move above it or below it. If we move below it, we could very quickly make it to 24.8 and continue, just the move to the 61.8% FIB on the daily chart. If this trend line still holds and we break above 26.97, then we could make it gradually with these levels higher, and then we would simply say, okay, now possibly the down leg is over and we continue higher. And can you see we did end the week with a bullish engulfing, but it was not confirmed by stochastic. So I kind of feel there's room still for the market to move lower. And that is all for the TTF front month. And now it's time for European carbon emission certificates. So the market was actually really interesting over the past week. But as always, we start with the weekly chart, a little bit zoomed out. And we can see here that, okay, nothing new here. We had a downtrend that accelerated. So we drew in this secondary trend line, or this steeper trend line rather. We did get a bullish piercing line 2 weeks ago. And it was confirmed with another green candle last week. So now we put in these FIB retracements, trying to see how high we will retrace. Anything below the 23.6% FIB retracement at 58.2 is considered noise. But looking at the stochastic, I think there is room for the market to move a little bit higher. Maybe, so the deeper corrections go all the way to 50% or 61.8%. The shallow corrections would go to 38.2%. So somewhere around this, we will top out. I think we could make it above the 38.2 because you already pierced above it with the wick. Volume is high and stochastic is bullish. So yeah, first upside. Then I still believe that eventual downside continuation is most likely. And that's simply because the 8 and 12 moving averages and also the momentum tools are still bearish overall. So that means right now just a little bit of a correction. So what does that mean for the daily chart? So we are topping out a little bit, or we have topped out last week. And we are now coming off a little bit. And here again, we are drawing in FIBs. We try to see this up leg. How low can we go here? You can see we found support at the 38.2, but stochastic is still giving us a signal that we could move a little bit lower, once again to the 61.8% FIB at 55.56. Somewhere in this area, you should bottom out and continue higher. Once again, the same rule applies, so I think we'll continue high afterwards because of the trend and momentum tools. So we could get something like this here. And then the move above 62.8 would then mean we are forming our first higher lows, and our first higher highs as well. So the wedge target from here is still active and it is near 70, which is also a round number. So I see the market overall move towards 70 the next couple of weeks. If we maintain higher highs and higher lows, of course. So remember, on the daily chart, we are looking for first a little bit of a decline and then we move higher. So this exactly is happening on the intraday chart here on the 15 minutes, because what we see here is a falling wedge, and falling wedges usually drive price into an increasingly tighter range, usually like 2/3 into the apex, so maybe somewhere around here. So you can see how this would work out perfectly, because they eventually do resolve to the upside, how we could continue a little bit of downside before breaking higher, right? So let's have a quick look. So the 61.8% FIB on the daily chart is 5556, and on the intraday chart it would be 55, yeah, somewhere here, right? So essentially, there, 5556 here. So essentially what we could do, we could get like a few more swings. So maybe this is the last swing lower before we push higher again. But this morning, on Monday morning, I think we have topped out for now. Stochastic is bearish, so we kind of need a move below 57.8 in order to continue this down leg. But it really depends all on this here. If we break above the falling wedge earlier, then we could get maybe a little bit of upside, but overall maybe a few days of sideways movement. So if we break higher, then maybe a little bit of sideways smaller candles, because this would be against anyone's expectations. The bulls wouldn't expect that really, and the bears wouldn't expect that either. All right, okay, that is all for European carbon emission certificates. I think the 3 time frames slot into each other really, really nicely, so keep an eye on them. That is all for EUAs.